Right, so now we're going to look at double entry. So last, or 2 weeks ago, okay, before the public holiday, we spoke about the importance of knowing what things are. Okay, so you need to know what things are before you can apply the double entry system. Okay, if you don't know what things are, then that's a problem. Okay, because then the first step is missing. Okay, you need to have good basics in order to do more advanced. It doesn't matter what I'm doing, just a note about that. It can be a counting equation, which is your first application that they talk about in your textbook and your study guide. It can be a journal, it can be a ledger, it can be a trial balance, it can be anything, financial statements even. You are always going to have to interpret and analyze transactions. How do you interpret and analyze? You need to identify what's happening in the transaction. Is it cash or is it credit? And I need to know what is the accounting element or what is the accounting effect. Okay, in other words, what's actually happening? Okay, meaning, am I increasing or decreasing the account? Okay, that's the understanding, that's the interpretation. Okay, and we'll see that just now when we do some examples. Just to give you one, we spoke about the vehicle. If I buy a vehicle, we know a vehicle's an asset, right? So if I'm buying a vehicle and I know it's an asset, what's happening to the asset? It's increasing. So would I debit or credit that account? See, I would debit the account for vehicles because I know vehicles is an asset. And I know assets increase on the debit. See, that's why those rules are so important. Okay, and that's the approach. So I'm not going to ask you to study huge amounts of information. Okay, that's one way of doing it. It does work, but it just takes a lot more time and effort. And if you forget something, then you get things wrong. Okay, or if the examiner gives you something different, then you get things wrong, because now I can't remember seeing that. Okay, so this approach always works, and it's the most easiest and simplest way to approach accounting if you're not going to study it further. Okay, even if you study it further, I'm still going to say the same thing, right? Because you can't change the basics, you can't change the principles. Okay, things are what they are. Okay, so assets are assets, liabilities are liabilities. We can't change what they are, but we can do different things with them. Okay, so I can buy an asset, but I can also sell an asset. I can take out a loan, I can also pay back a loan. They're two different transactions. Does that make sense? Okay, so that's what we're going to be doing. We're going to be applying the double entry rule, which is every debit must have a credit. What does the debit mean? We spoke about it last time. If someone asks you what is a debit, what do you say?
Debit is like money in the bank.
No, it's not.
In accounting it would increase. It means it's like
Not always. A debit isn't always an increase. A debit would be an increase for an asset, but a decrease for liability, because you have those 6 rules. Come, you're overthinking it. A debit is the left-hand side of an account. That's all. Remember that? We said a debit is the left, the credit is the right. That's it. Okay, accountants use that to refer to the different sides of the accounts. They don't talk about lefts and rights. Can you imagine how silly that would sound? Okay, put this on the left, put that on the right. Okay, it doesn't sound accounting. Okay, it sounds more accounting by talking about debits and credits. Okay, and that's it. That's what it means. Okay, a debit is just the left of an account. The credit is the right of an account. It could represent an increase for certain accounts. It could represent a decrease for certain accounts. It depends what account you're dealing with. See, that's the big question mark. Do you know what account you've got? If you know what account you've got, then you'll know how to approach it. Does that make sense? Okay. So let's practice. In the textbook, they've given you different examples, and they've given you debits and credits and all of that. Okay, these are examples to practice the application. Okay, so I don't want you to just study this. That's what I don't want you to do. I want you to understand how to get there. Okay, because that's more important. Right, if you want, you can just study what they tell you in the textbook. When you have a capital contribution, you must credit the capital. See, that's one way of studying accounting. That's using your memory. Okay, then you need a massive memory because there's a lot of transactions. Okay. going to do is I'm going to remember those 6 rules. Remember those 6 rules, that page you had last week? Okay, don't put that page away. Keep that page nearby. Okay, because obviously you're not going to know those rules off by heart. Do you agree? Okay, so keep that page in front of you so you've got all 6 rules in front of you. Okay, then I'm going to show you how to use the rules. Okay, so now I know what I need to do. I need to understand why do I do that. Okay, that's the key. Right, the first one is easy because capital is capital. Okay, so when I look at the transaction, see, this is what you'll be given. So you'll be given this in your assignment, you'll be given this in your exam, you'll be given a transaction. Okay, so they've described it. They've said, the owner gives 1 million to the business. You need to identify keywords that stand out. What stands out? Owner gives. What else? To the business? I wouldn't say that stands out.
But then we can see the figure.
Yes, the figure stands out. Okay, so what did the owner give? He gave cash. The owner gave money to the business. Okay, whose perspective do we look at? The business or the owner? The business. Okay, because remember you're accounting for the business's transactions. Okay, so from the perspective of the business, what's going to happen to the business's bank account? Good. Okay, so this tells me I'm dealing with bank. Okay, money's in the bank. Money is cash. Cash is in the bank. Apply your definitions. Bank is which of those 6 rules?
When you say bank is which of those 6 rules?
Which elements?
Referring to like assets.
Yes, which elements?
It's an asset, it's a resource.
Good, there's the answer, asset. Okay, so now I know bank is an asset. Now you need to ask yourself the question, what is happening to the bank account? So tell me what's happening to the bank account of the business. It's increasing, correct. So now look at your 6 rules that you're studying or that you've got in front of you. Where does an asset account increase? On the debit side. See, that's how you get the debit and credit. Notice I don't ask you, do I debit or do I credit this account? Okay, I'm asking you, what do I have and what is happening? Okay, if you know what you have and if you know what's happening, your 6 rules tell you what to do. Does that make sense? Does that make sense?
I was struggling with this a lot.
Okay, right, debit plus, I'm going to use 1 million. Okay, that's why I'm putting it on the debit side. Okay, because I know what it is and I know what's happening to it. That's all it is. See, it's understanding. If you can understand the transaction, you can do any transaction. Okay, and you'll see you guys will get better at doing this. Okay, what else do I have? So besides 1 million standing out, you guys also told me that owner gives stood out. So if you see owner gives, what are you thinking about? Good. See, now you know your definitions. So this is telling me that I'm going to affect the capital account. Okay, we know capital is capital. We don't even have to identify it. Capital will always increase on which side? On the credit side. So plus 1 million credits. Okay, you don't have that in your notes. You've got notes, so add it. Okay, put answers. Make your studying easier. Okay, so you've got notes, you've got the textbook, you've got the study guide. Okay, those are all different resources that can help you do well in this particular module course. Okay, so this is what we need to write down for the tier counts. Okay, and this is the most important thing out of everything that I'm going to be telling you over the next few weeks. Okay, if you don't know how to interpret transactions, you're never going to be able to do accounting. Okay, it starts with the interpretation. It starts with understanding what's happening in the question. That's where it starts. Okay, so week 2 is actually more important than week 1. Okay, because week 1 is just studying. Right, knowing what something is isn't a problem. Okay, you can study that. Okay, doing this requires a bit of practice. Okay, that's the challenge. The challenge is, can you do this? Can you identify the keywords from the question? question.
I'm not sure if I'm. But then, in the first scenario, we looked at the factor that is the million, right?
Correct.
And we've identified that it's we identified the bank, right?
Correct.
We then went further in identifying the type of
Accounts. 100%.
asset, correct?
You have to.
So we've identified our asset increase, and an increase on the asset will be on our debit side.
Correct, because you've got 6 rules that tell you where the pluses and minuses are.
Okay. So in the event such as capital,
Yeah?
we're looking at capital. Okay. So with the capital, we're not going to interpret it like how we have asset.
Well, capital, if you want to, you can say capital is capital.
Okay.
And capital is increasing.
Okay.
That's also fine. If you want to do all the steps, you don't have to for capital because you guys don't have different types of capital. Capital is just capital. Yeah, but you can if you want to. You can say, well, in this instance, did the owner contribute something? Yes. So did I have a capital contribution before they contributed? No, I didn't. Do I have capital contribution after they contributed? Yes, I do. Okay, so it's gone up. Okay, yeah, just bring that forward. Thanks. Did you get the assignment answers? Where did I put that? I think you took all of them. Oh, it's part of that. No. Where are the extra assignments? Are they in the folder? Okay, you must have taken it out then. Oh, yeah, you took yourself a copy. Awesome, great, yeah. So make sure you've got that. And I also printed this. I asked them to give you this exam. Did you get this as well? Great. Okay, yeah, thank you. Awesome, yeah. So Gmail, perfect. Okay, yeah, the handwriting is fine. Just the first one, SNELLM2. Brilliant, okay. Right. Okay, so you guys will have access to last week's, you'll have access to every week. So if you want to watch this again and again and again, it's totally up to you. Okay? It's a private video, so only you will have access to it. So you need to log into Gmail, okay, and then there'll be a link that comes from YouTube straight to your inbox. Okay, you can just click onto that and you can watch it. Okay, you can watch it either here on campus, there are facilities downstairs that you can make use of, or you can watch it off campus. It's totally up to you. Okay, you can watch it on your phone, you can watch it on your tablet, you can watch it on any device that has the internet. Okay. Alright, so that's the first example. Let's apply what we now know in terms of process. Okay, see, this is practice. This is application. Notice I'm not going to study this, so I don't have to go and learn this. The textbook tells you, when you have an acquisition of a loan, what does that mean? I'm taking out a loan. Okay, loan acquisition of a loan means I'm going to go to the bank and I'm going to apply for a loan. That's what that means. The rule says in the textbook that when you receive a loan, the loan is always credited. See, that you can learn if you want to learn lots and lots and lots of transactions. Okay, let's apply what we're doing. We're doing something better, which is analysis and application of the rules that don't change. Right, so let's look at the question. The company obtains a 2 million loan from a bank. What stands out? 2 million. What else? Yes, okay, so the 2 million tells you that you're dealing with bank, fine. What else? The loan, of course. Okay, these are the two things that should stand out. So now let's interpret. See, this is how you do the analysis. Okay, so I know that this company is obtaining a 2 million rand loan from a bank. Do you agree? If I'm obtaining a loan and I'm going to be receiving cash from the bank, is my bank going to go up or down? Correct. So you know that you're getting 2 million. Okay, you're getting physical cash. 2 million is going to be transferred from the bank into your account as a loan. Obviously, you're going to have to pay it back in the future. That's another transaction. Right now, as it stands, I received 2 million from the loan account. So what's going to happen to the bank? Well, let's first ask ourselves, what is it? Bank is what type of element? An asset. If you're getting a 2 million rand loan, what's going to happen to the bank account? It's going to increase. Where do assets increase? Now look at the rules that we looked at last time. Where do assets increase? On the debit side. So we're debiting 2 million plus. That's the first bit. You guys told me that this stood out, loan. So let's interpret what's happening. Okay, do I know what a loan is? That's the first step. Do you know what a loan is? What is it? Good. So I know a loan is a liability. If I'm taking out a loan, what's going to happen to the liability? It's going to go up. Now look at your rule sheet, those 6 rules. Where do you see liability plus? On the credit side. So that's why I'm crediting 2 million. Does that make sense? Okay, now you've got a debit, now you've got a credit, now you've got both. Okay, so a transaction will always affect 2 accounts. One account will go up, one account will go down. Not always the case though. You can have 2 accounts going up. We'll see some scenarios. You can have 2 accounts going down. It can also happen. Okay, but one account will be debited and one account will be credited always. Is that okay?
Can we look at income?
Yes, we're going to look at all the different types. There's a lot here.
Yeah, let's have a look.
Okay, can we finish all of these, and then if we still haven't covered income, we can look at it.
Actually, I need to apply income to this scenario.
You can't apply income to the scenario because this is looking at a loan.
Okay. So,
Okay, you're trying to overcomplicate it by bringing in too many things. Okay, it is what it is. Okay, every transaction will always only have a debit and a credit. Okay, yes, you can have other transactions that have other things being affected, but those are other transactions. Okay, so don't keep it simple. It's one question at a time. One question, one question, one question, one question. Okay, I'm going to do one in this past paper. Okay, 2016. I don't have 2017 yet. I don't think they've posted it up on my unisa. When they do, please email it to me. We'll do it in class. Okay, definitely. Past papers we're definitely going to do. Right, I'm trying to do questions from the past papers, not questions from your study guide, because they have answers to those. All right, let's rather practice here so we get more done and you guys have more questions that you can use to practice. Okay, you can always go back to your textbook. I'm going to give you some homework that you can do for yourselves to see, are you understanding with us correctly? Are you doing the debit and credit correctly? Okay, but we'll discuss that at the end. Okay, things that you can do as practice. Right, are you guys happy with that one? Great. Number 3. The rule says, if I buy an asset, I must credit the bank. That's what they say. Okay, you can study that, or you can learn the 6 rules and then just practice applying them. Okay, that works a lot better. Okay, so let's go to the question. Here's the scenario. An asset was purchased for 1 million and paid by check. What are we going to circle, highlight, underline? Okay. What else? Yes. Okay, if you want to, you could also put the 1 million with that, paid by check, because that tells you your bank is going to be affected. Do you agree? Okay. Does it matter what asset I'm buying? No. I could have said a vehicle was purchased for 1 million. It doesn't matter. Okay. We're just buying an asset. It could be a vehicle, it could be an equipment, it could be a computer, it could be a furniture item, it could be anything. Right, so if I'm looking at this, do you guys agree if I'm buying an asset, what's going to happen to the bank account? There's the answer. But before you say decrease, you need to tell me what it is. Bank is what? An asset. Why is it an asset? You've got a definition that says resources that are controlled are considered assets. Bank is a resource we control. Is it going up or down? It's decreasing because I'm buying a vehicle. Right, if you're using cash to buy a vehicle, you're not going to end up with more cash. Does that make sense? Okay, it's logical. Okay, it's literally what's happening. That's what it is. Okay, and if you can apply that, you're going to get things right. Right, so bank is an asset. The asset's decreasing. Where do assets decrease? Look at your 6 rules. Good. Credit side. So I'm going to show a credit here, minus 1 million. Got the first bit? Next bit. What did I buy? In this case, an asset, well, I gave it a name, a vehicle. Doesn't matter what the asset's called. I'm just going to write vehicle as our example. Okay, if I'm buying a vehicle, is a vehicle an asset, liability, income, expense, or capital drawings? Good. A vehicle is an asset. What's happening to that account if I'm buying a vehicle? It's increasing, right? If you buy a vehicle, you're going to have more than what you started with, right? No vehicle before you bought it. Now I've got a vehicle. Did your vehicles increase? Yes, they did. Go look at your rule. Where does an asset increase? Debit side. So debit plus 1 million. And now you've done the accounting for that transaction. Okay, this is basics, this is interpretation, this is analysis. Earlier in the slides, I mentioned how important this is. You're going to do this every time you get a question. Doesn't matter what it is. Accounting equation, journals, ledger, financial statements, it doesn't matter. Every single time we see a transaction, you need to be able to interpret it correctly. Okay, you need to be able to take out an account and look at the effect, debit or credit. Make sense? Let's try this one. Okay, so the rule says, if I buy or purchase an asset and I'm using credit, then my creditors are always going to be credited. That's the rule. You can study that, or you can apply the 6 rules that you've got on that golden rule page. Okay, so let's highlight what stands out here. An asset was purchased for 500,000 on account. Yes, the whole thing. Okay, on account means I'm owing someone something. That's a liability. Do you agree? Okay, creditors is a liability. Do you agree? Okay, if you didn't have that on your list, I asked you to find different accounts, you could have added that to your list. Okay, creditors is a liability. Creditors will have a debit or credit. Well, what is it? It's a liability. So if it's a liability, if I'm buying something on credit, am I going to owe more or am I going to owe less? If I'm buying something on credit, am I going to owe more or am I going to owe less? I'm going to owe more. So creditors, you know, is a liability. You know that if I'm buying on credit, I'm going to owe more, I'm not going to owe less. That's logic, right? Okay, if you buy something on credit, that means you're going to have to repay in the future. Okay, so now look at your 6 rules. Where do liabilities increase? On the credit side. That's why I'm crediting 500,000. Make sense? Jot it down, write it in, make sure you've got it. Okay. What did I buy? An asset. Doesn't matter what it is. I'm going to change the name. I'm going to call it equipment now. Makes no difference. Okay, so we just spoke about a vehicle. Let's talk about something different. Equipment was purchased for 500,000 on account. Okay, so if I'm buying equipment, do you know what equipment is? Equipment is an asset. Right, so if you're buying an asset, what's happening to the account? It's increasing, right? You've got more equipment now than you did before. Okay, go back to those 6 rules. Look at those pluses and minuses. Where do you see the plus for an asset? On the debit side. And that's why you're debiting the asset with 500,000. Okay. See, this is knowing what you're doing. Okay, why you're doing it. Okay, it's not just because the textbook told me I must debit this and credit that. Okay. There's 2 ways of doing accounting. One way is by studying it, that's tough, or the other way is by understanding what's happening. That's easier. Okay, because all of you can interpret this. Okay, you can all see that an asset account is going up because I'm buying an asset. And you can all see that if I'm using a liability to buy an asset, I'm going to owe more, I'm not going to owe less. Okay, it's logical, it's straightforward. Okay, as long as you can interpret things correctly, you'll get things right. Okay, now we're looking at the payment. So we just looked at buying something. Now we're going to look at paying off the liability. Here we have a rule that says, if I have a payment to a creditor, the bank is always credited. That's the rule. Let's apply what we know. Okay, so in the question, what stands out? Well, the previous 500,000 purchase on credit is settled. That should stand out. Okay, this should stand out. Okay, so what are they saying? They're saying, I bought something previously, and if I bought something previously, I'm owing someone something. Okay, am I buying more from them? No, I'm actually paying them. Okay, so let's interpret what's happening. If you're paying someone, what's going to happen to your bank account? It's going to decrease. Do you know what bank is? Good. Okay, see, there's your working. That's your thought process. What's in bracket is what you're thinking about. You never have to write that down anywhere. Okay, but if you want to, you can. The examiner's not going to mind seeing that. Okay, it's just additional workings. Okay, so the bank account is decreasing because I'm using cash to pay the outstanding liability. Does that make sense? Okay, look at your rules. Where do assets decrease? So where is the minus for an asset? There's the answer. Minus 500,000. What am I paying off? The previous account. So, do I have a liability? Yes, because who would you have bought from? Here's the purchase. You bought from someone, now you need to pay them. Do you agree? Okay, so who do I pay? I pay the creditor. Creditors is what type of account? A liability. If you're paying a creditor, you're going to owe them more, owe them less. You're going to owe them less. Where do liabilities decrease? Look at your 6 rules. Debit side. And that's why you've got debit minus 500,000. Is that okay? Next. Payments from debtors. We need to understand what a debtor is. What is a debtor to the business? A customer. Customer that owes. Do you agree? Okay, so debtor is anyone who has bought something from the business who still needs to pay the business. Okay, so the business is going to have a credit sale. Right, so here we've got a debtor sending a check to settle the outstanding debt. What stands out? Debtor sending a check to settle outstanding debt. 1 million. Okay, so who are we in this relationship? The business or the debtor? We're the business. Right, so as a business, do we want debtors to send us checks? Yes, because that'll be a form of payment. Okay, so from the business's point of view, what's going to happen to your bank account? It's going to increase. Good. You're going to get something from the debtors. You're going to get cash from the debtors. Right, what's happening to the bank? Increasing. Okay, you know bank is an asset. You know it's increasing because you're receiving money from the debtor. Do you guys agree? Okay, so if I'm receiving money from the debtor and it's bank is affected positively, where do assets account increase? Correct. So debit for the plus 1 million. Okay, who did this come from? The debtor. Okay, so if this is coming from the debtor, is the debtor going to go up or down? What's going to happen to the debtor's account? Is the debtor going to go up or down? Correct. Is the customer going to owe you more or they're going to owe you less? They are going to owe you less. Do you agree? If they're paying you, you're not going to have more debtors. You'll have less debtors. What type of account is debtor? Asset. Decrease. Okay, so notice here you had an asset that was increasing and an asset that was decreasing. But you've still got a debit and credit. Look at your rules. Where do asset accounts decrease? Good, on the credit side. Minus 1 million. and that's the interpretation. Happy?
Creditors are people we owe, right?
Creditors are people you owe, correct. You buy from your creditors, you sell to your debtors. Makes sense. Okay, owner takes 100,000 from the business. What stands out? Owner takes 100,000. Okay, so what did the owner take? Cash. What account represents our cash? The bank. What type of account is bank? An asset. What's happening to the account if the owner's taking? It's decreasing. Where does an asset account decrease? On the credit side. Good. See, you've got it now. It's not too bad. Take some practice. After a while, you get used to it. Okay. Right, the last bit is, why did the owner take? It was for personal use. Okay, we'll answer your question just now. Let's just finish. Okay. Drawings is what? Drawings is drawings. What's happening to drawings? It's going up. Okay, before did I have any drawings? I had 0 drawings. Do I now have drawings in the business? Yes. Okay, remember accounting is accounting for what's happening in the business. Okay, so I didn't have drawings. Now I have drawings. The account for drawings is going up. Drawings will always debit plus 100,000. Okay, question?
So I just wanted to ask, when we write our exams, are they ever going to ask us questions on theory or only the practical side of accounting?
They can ask you both. The theory that you guys are tested on come from the last few chapters in your book. Practice management, trust accounts, how to manage a law practice, all of that. Okay, you'll see the last chapters in your book are theory, specific to your module, okay, being law practitioners. Okay, you won't find that in the textbook. The textbook doesn't have anything about law practitioners because your textbook is an accounting textbook covering debits and credits only. Okay, remember accounting is broad. It can be applied in different industries. Lawyers use accounting. Doctors use accounting. Everyone uses accounting because everything deals with rands and cents.
So this is not going to confuse me with me studying.
The textbook is better for identifying more examples and for covering more detailed, let's say, explanations around what we're covering in these chapters. Yeah, the textbook's not going to help you with the law practitioner stuff that's in your study guide. Okay, the study guide is what UNISA generally tests for you in terms of theory questions. Okay, so they'll give you short questions about practice management, how to manage your business as a law practitioner. Okay, that's what I've seen from past papers. Not to say it can't change, it can. In your assignment, the one that I gave you a solution for that you can confirm your answers with was all generally practical questions. There were 1 or 2 theory questions relating to like rules, okay, but there wasn't much. Okay, and why? Because that's the assignment. That's not the exam. Okay, if you're looking at the exam is generally 99% practical, 1% is theory. Okay, there's not a lot of theory. For you guys, if they do give you theory, it's going to be from the study guide, okay, the last 2 chapters. Okay, but we'll definitely look at past papers later. Okay, we're going to actually look at one example today to show you how this is applied to a question. Okay, because I'm going to show you how to do it for a past paper question. Then you can go to your study guide where you've been given lots of revision exercises where they give you the questions. Then you can follow the same approach and then check it with their solution. All right, and see, well, am I still getting it right? Okay, that's what I'm looking at. Okay. Right, we haven't finished with this yet, so let's keep going. Here's your income one. Receiving income. The rule says if you receive income and it's in the form of cash, bank is always going to go up. Here's the transaction. Cash sales of 3 million. This stands out, sales. What definition does sales meet? Is it an asset? It's not a resource. Is sales a liability? It's not an obligation. is sales and income? Yes, that makes sense. If I sell something, I get something, so that's an increase in benefits. Do you agree? Okay, so sales is an income. Do you agree? What is happening to the income? It's increasing because you're selling. I had 0 sales, now I've sold. Now I've got 1 sale. Does that make sense? Okay. What am I getting from the sale? Cash. Cash is going to affect which account? Bank. Good. Bank is what type of account? An asset. So if you're selling, are you going to get more cash or less cash? You're going to get more cash. So we're going to increase that account. Perfect. Okay, so bank asset increase. Where do assets increase? See, now all you need to do is just go look at your rules. Okay, your DEDLIC, remember we used that acronym? Okay, so even if you can't study and remember those rules, just write the acronym down. Okay, what am I dealing with? Asset. Oh, debit, asset plus. Now I've got it. Okay, I'm going to give you the video. It's online, so I'm going to assign Saks. Okay, so Lebo Khan. Oh, Carabello. Last week was a public holiday, the week before. Yeah, the week before. Sorry, I'm saying last week, the last time we had class. Okay. Oh, alright. Sorry you weren't here for the first one. Okay, it's all available to you. Okay. Alright, so bank is a asset. The asset is increasing. So I'm going to show plus 3 million here. Do you agree? Okay. Sales is an income. On your rules, where does the income increase? On the credit side. Credit plus 3 million. See, that's how you get the debit and credit. Okay, notice, did I ask you when I first started this question, give me the debit and credit? No, I didn't. I asked you to understand what's being described in the question. Okay, because that's everything. If you know what you've got, it's easy to relate the debits and credits. Okay, because debits just mean left and right. That's all it is. Okay. Alright, next bit. Okay, let me ask you to try this one on your own. Okay, I've been doing quite a few. Right, take a minute or two to see if you would be able to analyze and interpret this transaction. Let's go. Okay, so we were looking at, yes, oh sorry, I changed the slides. 7B, that's the one. Okay, that's the one we're looking at. The telephone bill is paid by check. What happened? Good. Paid by is important because now I know that this is being affected. Good. This is what? Yeah, but what is it?
It's a liability.
How is a telephone a liability? Yes. Okay, if you haven't paid your bill, it becomes a liability. Am I paying my bill? Yes. So it's an outflow of benefits. Okay, but telephone will always be seen as a expense. Okay, because you're going to be using it up. Okay, decrease in benefits. Okay, think about it. If you make a call, okay, when you're talking on the phone, there's an outflow of benefits. Airtime is being used. Outflow of benefits. Meet the definition of an expense. Telephone is an expense. Did I have an expense before I used the telephone? No, so there was 0 as an expense. See, accounting is looking at recording transactions. Okay, so do you guys agree I had 0 expense before I paid the bill? I now have an expense, so I'm going to record an expense. See, it's recording an expense. We're not talking about am I paying it off or not. Okay, obviously you're not going to have an expense after you've paid it. Okay, but you're still going to record the expense that you've paid. There's a difference, a slight difference. Okay, so telephone is an expense. The expense is going up because I'm recording an expense. Where do expenses increase? On the debit side. Good. So you guys would have shown +5 there. Then, hopefully you would have gotten this right. Bank is what? An asset. What's happening to it? It's decreasing. Now you look at your rule. So I go back to this. There's it. Where does an asset decrease? There we go. There's the minus for the asset. So all I need to do is show a credit for -5,000. And there's another interpretation. Okay, so now you guys have applied your rules, you've applied your definitions, and you've interpreted a transaction. Okay, happy. Okay, this is what I'm going to do. Credit sales. As soon as you see that, you should be thinking about that. Debtors. Okay, you can't have anything other than debtors if you have a credit sale. It's very specific. Right, certain characteristics make up certain things. Okay, so when I'm looking at, so for example, a chair and a table are very different items. Okay, obviously a table has a specific dimension to it. Okay, a chair also has a specific dimension to it. It looks a specific way. Okay, so sales that are on credit have a specific, let's say, characteristic that relates to debtors. Okay, debtors are people who we sell to on credit. Okay, so that's the first word that should stand out. So I'm going to write it down. Okay, let's think about the definitions now. Which account does debtors fall under? What element does it fall under? Is it an asset? Yes, it would. Okay, because why is it an asset? Well, it's a resource. Am I going to get something from these customers in the future? Yes, they're going to pay me in the future, right? Okay, so debtors is an asset that's increasing. Where do assets increase? On the debit side, +1 million. Okay, why did I have debtors? It's because I sold. Okay, you needed two sides of the transaction. Okay, so the sales part, this bit over here, this is going to be the other transaction. What type of account is sales? It's an income. Okay, it's an increase in benefit. If I sell something, I get something. If sales is an income, it's going up because I'm selling. So I didn't have a sale. I had 0 sales before. Now I've got 1 million sales. Where do income accounts increase? Credit side. That's why you're going to do this. Debit the debtors, credit the sales with +1 million. Okay? Here's another one. Stationery bought on account from company B. What words stand out? Stationery. What else? On account. Good. As soon as you see on account, you know you're going to owe someone. People who we buy from are called creditors. Does that make sense? Okay, so if I'm looking at creditors, do I know what it is? Good. See, you need to identify what it is. So do you guys agree, if I have a creditor, I'm owing someone something. That meets the definition of an obligation. An obligation is a liability. So a liability will be affected. If I'm buying stationery from company B, am I going to owe them more or less? I'm going to owe them more. So the liability will increase. Okay, now go to your rule. Where do liabilities increase? There's it, on the credit side. Perfect. So I'm going to put a plus 10,000 over there on the credit side. What did I buy? Stationery. What is it? It's an expense because you use it up. Okay, stationery is used up. It's like fuel. Okay, it's like water and electricity. It's used up. Okay, you use your stationery. You use your petrol. You use your water and electricity. Does it make sense? Okay, so if I'm using stationery is what? An expense. Okay, stationery is an expense. What's happening to it? Well, I had 0 expense before I paid it. Now do I have an expense? Yes, I'm recording the expense. Okay, so if I'm recording the expense, I'm recording an expense for stationery. The expenses are going to go up. It's going to be debited plus 10,000 on that side. Debit. Is that okay?